Mr. Speaker, on clause 31, the proposal by the executive is that they want to move items from zero rating to exempting. What that means, Mr. Speaker, when you're supplying motorcycles on tariff heading to 8711, the supply of electric bicycles, the supply of solar, the supply of lithium, once they go to exempt, it means the cost will have to shift to the consumers. Mr. Speaker, this is a direct increment to the consumers. When you exempt anything, because before, the producers, the manufacturers will claim. But once you exempt, it means ideally you have increased the price of that commodity. Mr. Speaker, you have passed the cost to the consumer. That is number one. Number two, Mr. Speaker, the issue of VAT on digital platforms and financial services. The proposal, Mr. Speaker, is that you want to add VAT. Mr. Speaker, once you add VAT on services on digital platforms, directly, that will be a cost on Kenyans. Mr. Speaker, you cannot say you are not increasing taxes when you are bringing such kind of proposals. Mr. Speaker, I come from a county where we have a lot of production of ceramics. Mr. Speaker, the proposal by the executive through this bill on clause 36, they propose duty on imported ceramics and sanitary features. They even go ahead to propose that the tariff heading from 6910 from 5% or 50% per kilo to excisable value. Mr. Speaker, this is direct conflict of interest. Every year we have been dealing with this issue of people who have tiles and the issue of ceramics. It is specific people who do these businesses that you're interested in making them excisable. What this means, it is that you are targeting people not to pay taxes and move out the importers, people who are importing. Gikomba is full of people who import sanitary materials for sale. And they are cheaper because the economies of scale, for instance, in China, are better than in Kenya. Mr. Speaker, why do you want to advantage one person so that every time, every finance bill increases the cost for manufacturers who are local, and this is direct conflict of interest because you know the people who are in this business. But nobody will mention that because the committee at this point, every year has continued to do so. Allow me, Mr. Speaker, to also go to a very controversial...
Honorable Ngongoyo, so that we avoid points of order.
Okay.
The report of the committee seeks to delete that provision you're worried about.
Mr. Speaker, we are debating. Allow me, Mr. Speaker. Thank you very much. Mr. Speaker, we are debating the bill that is on the floor of the House. And Mr. Speaker, the report has been tabled.
Honorable Ngongoyo, the Chair Departmental Committee on Finance and National Planning is on a point of order.
Honorable Speaker, is honorable member in order to import improper motive on conflict of interest to the committee or to the report, Honorable Speaker? The items that the honorable member is purporting to read, he should actually declare if he is conflicted on the matter, because the matters that are contained in this bill, it's not just only the ceramics, it's just only tiles. There are so many other variety of products that are being recommended to be accessible, Honorable Speaker. And this, Honorable Speaker, is so that we incentivize also local manufacturing and make sure we create our own jobs here rather than exporting those jobs to Kenya, Honorable Speaker. So I would want him to substantiate who is conflicted, Honorable Speaker, and if he does not say who is conflicted, then he should withdraw that statement, Honorable Speaker.
Mr. Speaker, 2 companies in Kajiado have closed down. They used to do tiles, one in Isinya, one in Pipeline Road. I am talking of details. They closed down back in 2023 when the first tax was introduced. I am saying that they raised even before the committee. They came before the committee.
Honorable Ngongoyo.
Allow me, Mr. Speaker, to say also, we are debating the bill that is before us. The report of the committee has just been tabled now. Not everyone has had access to it.
No, you are right. You're right.
The extension...
You're right. The question is,
yes,
have you said that the members of the committee on finance and national planning have conflict of interest?
Mr. Speaker, I have not said so. Mr. Speaker, I am a seasoned member.
If you've
I
not
have not
said so,
imputed any motive.
well and good, the answer will be checked. If you've not said so, you should proceed. Proceed and make your...
Thank you, Mr. Speaker. Allow me to say that, Mr. Speaker, I know you're, and I don't want, Mr. Speaker, to engage you because I'm the one on the floor, but allow me to say that we are debating the bill, not the report of the committee, because the report has been tabled now. But, Mr. Speaker, some of us have not had access to the report until it has been tabled just now. Now, on clause number 3, Mr. Speaker, allow me, Mr. Speaker, to just avoid this. On clause 7, Mr. Speaker, on the issue of the non-resident tax. Mr. Speaker, if you want to mean that foreigners are not paying rent, just say it in the bill. There is nothing wrong in it. Just say you want foreigners to pay. There are Kenyans who own houses in this country, in the diaspora. You are even encouraging them to buy houses in this country. If it is so, do not tax them twice or thrice, because even when some of them were building their own houses, they paid tax. They are also submitting, they are also bringing resources to this country that we do not have. If you want to grow an economy, you do not grow an economy by shouldering people who are trying to make their ends meet. The finance bill should be an enabler. If you're saying you're streamlining what? If it is revenue streams, when the bill that is proposed to this House wants to single-handedly issue the commissioner with the ability to charge me, to tax me using third-party information that they do not have access, they have not verified, and tell me that I am liable to pay this amount of tax. Mr. Speaker, what law would be vague? What law would be useless as such a law? Mr. Speaker, why we are in this House is to make sure we make laws for posterity. Characteristic of a good law is one that can go beyond next year, can go beyond this regime. What is proposed by this Kenya Kwanza regime is the worst finance bill that has ever been. This one that they are saying that you are streamlining and you have not increased. Uhuru Kenyatta, in his regime, he never wanted to increase tax beyond 20 billion. This one is proposing more than 117 billion. When you look at the figures and the impact of some of these amendments you are trying to propose, the amount are outrageous. Allow me, Mr. Speaker, to finish by saying that if it was a good law, you do not need to convince people to pass it, if it was a good law. A good law should explain itself, should be very explicit, and Mr. Speaker, even for business people, if you received 100,000 proposals from the public, it means it was dangerously bad. And Mr. Speaker, allow me to say that from clause 1 to the last clause, we will propose amendments that we feel will enable Kenyans not be burdened further than what they have been burdened. As I conclude, Mr. Speaker, on the issue of Mr. Speaker, on the issue of the change of dates of filing returns, Mr. Speaker, people who are doing nil returns, you cannot give them 1 month. Mr. Speaker, why people do nil returns? It means they have not made profits. It means, 2, they were not able, probably within the financial year, to meet their expectations. When you say you've given them a month, why are you giving them a timeline? Mr. Speaker, returns, some of us are not accountants. Some of us need advice from our financial experts. When you bring in a timeline to people who have nil returns, these are the local Kenyans, these are university students. Why do you want to impose that on them? Mr. Speaker, this is more dangerous than what we had even in the last financial year. As I conclude, Mr. Speaker, the issue of gratuity, it might look a good proposal to say that your gratuity, you'll get it in 3 years. But remember, at the end of that proposal, you are disadvantaging employers and forcing them to be in contracts with employees for a number of years. There are a lot of people who have given their employees 1-year contract, 6 months contract, based on their ability. Now you're forcing them to go to 3 years because the issue of gratuity will be scaled down to the employees that you have. Mr. Speaker, in my honest opinion, let us reject this finance bill. It doesn't add value to any Kenyan. It is a burden. It is bad. It is.
Nikiripotia Kamachu TV, itaripota 001 wa Chumbi Kamachu.